Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Wednesday, April the 23rd, 2008. Headlines out of Switzerland this morning read Euro rallies up to 160.19 on expectations ECB may raise rates. The euro rose against the dollar on Tuesday, trading above 160 for the first time since its 1999 inception, amid growing expectations that the European Central Bank's next move may be an interest rate hike. The ECB's Governing Council member, Christian Neuer, said the bank would do what it needed to bring inflation back to its target of just below 2%, adding that the central bank would move rates if needed. That followed comments from Governing Council member Yves Mersch, who said the ECB has to ask itself each month whether a rate raise is needed to control inflation. These comments, combined with a mixed reading on the U.S. existing home sales in March, helped push the European currencies through the key 160 level. The euro dollar traded as high as 160.19, but later gave back some of its gains to close at 159.75. The dollar yen traded down to 102.92. The dollar Swissy dropped to 10036, and the pound dollar rose to 199.61. In spite of the ECB's comments, it is seen as keeping rates at least a 6-year high of 4% for a while. In contrast, the markets expect the Federal Reserve to lower benchmark U.S. rates further from the current 2.25% at a policy meeting on April the 29th and 30th. U.S. economic data on Tuesday showed the housing market remains soft, with existing home sales falling 2% last month. Elsewhere, the Canadian dollar fell after the Bank of Canada cut its benchmark interest rates by 50 basis points as expected. Pressure on the dollar continued in the Asian session as crude futures reached a new record high of $119.90 a barrel. Prices in crude will dominate the dollar price movement in the near term. Crude prices were supported by supply worries connected to a refinery strike in Scotland and potential disruptions in Nigeria. Increasing risk appetite and surging commodity prices has given a strong boost to the Aussie and the Kiwi, factors that we don't expect will shift in the short term. In addition, support for carry trades, especially those funded by the yen, has gained traction, with the Aussie yen touching the psychological 98 level. U.S. equity markets lost ground on Tuesday as earnings on the whole proved to be disappointing. In addition to existing home sales for March showing continued decline in the housing sector, there was little positive economic news to grab onto for bullish investors. Asian markets posted gains this morning, with the Nike and the Hang Seng both up. Stocks hit a 2-month high as commodity producers rose on the back of record prices. Shanghai rose nearly 10% as it raised its net income forecast following planned price increases. Major European indexes traded slightly above fair value. With energy prices surging, inflation in the Eurozone doesn't look to be easing anytime soon. ECB's Neuer stated that interest rates could go in either direction, and the ECB would do whatever is necessary to ensure inflation drops below 2% next year. This bullish sentiment surrounding the euro should last even with the euro at these elevated levels. The Australian CPI surged to its highest level in 17 years, reaching 4.2% versus 4% that was expected and 3% prior. This figure is well above the RBA's comfort zone of 2 to 3%. And the central bank will have to stay nimble. If signals of moderation in the domestic economy and the neutral tone in the last RBA minutes keep the market sentiment on the Aussie bearish, Data like we have seen today will move the RBA, in all probability, to hike interest rates again in 2008. On the continent, the flash PMI survey is expected to show the Eurozone economy has expanded slightly, but pipeline price pressure remains elevated. We are expecting the Bank of England's MPC minutes to show an unanimous vote to cut interest rates by 25 basis points to 5%. The vote actually came out 7-2 in favor of cuts. The market will also focus on whether the committee believes the credit crisis is reaching a point where more aggressive easing is necessary. That concludes our news for today. We hope you are finding this helpful in your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center and also a link to our Forex forum at Yahoo. We hope you'll visit us there soon. We hope you'll be able to join us again. So until then, happy pipping to you.